everyone, thanks for tuning in to another video. I appreciate all the viewership and hopefully you are finding some value in these videos. On the 15th day of every month, the Canadian Real Estate Association puts out the benchmark price and house price index, or HPI numbers, for the previous month. So in spirit of analyzing data and what's going on in the market and running numbers, this week's video is going to be on the March 2024 benchmark price and HPI numbers. Just like previous videos, we've been going over Hastings, Prince Edward County, how that connects with what's going on in Toronto, which impacts our market, obviously, and then what's happening nationally in Canada. So let's get into the video. We could see a lot of green this month, and I'm going to talk about what that means maybe for the future going forward. So let's get into it. First off, let's talk about Hastings and Prince Edward County, because this is where most of you watching this video are probably living and located, or maybe you're looking at moving to this area. This is where I work. This is what I really care about and know about. And real estate is so local. So although there's stuff going in other markets in Ontario, there's stuff happening on a national basis. Obviously, policy and Bank of Canada impacts all of these markets, but real estate is so local. So really honing in on what's happening in our local market is super important. So Hastings and Prince Edward County, we have benchmark price sitting at $577,700. HPI 361.3. So that's up 4.7% year over year. So comparing to last March of 2023, and up 6% year to date compared to January of 2024. So lots of green here. We see these prices are moving up. So if you've been in the market in Belleville, you know that these entry-level price points in Quinte West, they're moving really quick. So stuff under 500K, it's selling, as long as it's a decent product, it's selling very quickly. Sometimes getting multiple offers. So that's really what's been happening, and that's not really changing from what's happening in the last 2 years. The difference here is that we see these mid-priced homes, so let's say 600 to 900,000, they're starting to move more. And I'll talk about why that is, because of what's happening in the GTA and what's happening in surrounding markets, because those homes are very dependent on migration to our area, because a lot of the time we don't have people who are buying those homes here or sucking up all of that inventory, because there's just not all of that money here. There's not those high income earners or those people who have all that equity that they're bringing here. So we're seeing those move quicker. Just a thought here. So highest benchmark price since October of 2021 to July of 2022. So there was a 10-month period there where we had higher benchmark price in HPI. Obviously, we know why that was happening, because rates were rock bottom at that time. So October overnight rate was 0.25, and then in July was 2.5. So we're double the overnight rate there, and this is the highest benchmark price since July of 2022. So going back almost 2 years, we're really ramping up on the benchmark price front, and even we're comparing to last year, we are 4.7% up from last year, but the Bank of Canada overnight rate was 0.5% lower last year. So despite higher rates, we're still seeing prices increase. This leads into the Greater Toronto Area. So why that mid-tier price point in our market is moving, I think, is because Greater Toronto Area is ramping up a little bit. So we have benchmark price in the GTA sitting at $1,113,600, HPI at 352.5. That's up 0.3% year over year. So just holding year over year, and up 4.5% year to date. So we see the huge price discrepancy here, right, between Greater Toronto Area. This isn't just Toronto, this is Greater Toronto Area and Hastings, Prince Edward County. It's literally half, like 1.1 million compared to about 550. It's half the price. So why we're seeing that midpoint move is because Toronto market's holding sales volume, although we're not talking about sales volume here. It's higher. Last year's sales volume in Toronto was very weak, which again goes into my point of why that mid-tier price point was struggling in our market. So prices are holding in Toronto. Sellers are coming to terms with, okay, this is what's going on in the market. It's not shooting up to what it was in 2022 and in the end of 2021. Here's my price. This is what I'm going to take. I'm done being in the city. I'm going to leave. I'm going to go retire. I'm going to go move for a different life, whatever I'm doing. There's more confidence in the market, which sellers are selling, there's more homes transacting, and then in turn, that means, our mid-tier market is moving, right? So Greater Toronto Area benchmark price is holding, HPI is holding. Last, let's talk about Canada. So the Canada story, similar to what's going on in Toronto. Canada benchmark pricing at 729, 700. HPI 307. So we're seeing a 0.7% increase year over year and 3.1% year to date. So a little bit more in Toronto year over year, a little bit less year to date. And then Hastings, Prince Edward County, our market outperforming both. And I think we know why, because if we're looking at these numbers, we see how much lower our price point is. Obviously, that Canada number is very impacted very heavily by Montreal, Toronto, Vancouver, right, which pushes it up because we see a lot of areas in Canada where you can buy a house for $200,000, $300,000. That's totally livable, right? But at the same time, that's not where everybody lives. And where everybody lives, usually housing is expensive. So we see Canada numbers holding along with all of these markets. And really the reason for this, which is confusing obviously to the public who's saying, what's going on? Rates have gone from 0 to 5%. And yes, we had a small correction, but prices are still holding, right? Like I mentioned before, if we're looking at last year, last March, we had the overnight rate at 4.5%, and now we have it 5%. But we're seeing, if we talk about our market, 4.5% increase, right? So rates are higher. Should that not mean prices should be lower? Well, that's not the case because of inventory levels. And that's really what saved prices in a lot of these markets, is just not all that inventory coming to the market. Because if we had rates increase and it was more expensive to own real estate and then everybody had to sell because they couldn't afford their mortgage, we would have had a ton of inventory come to market and prices would have softened way more than they have. So this is potentially the highest we're going to go with rates. Bank of Canada's next announcement is on June 5th. Tiff Macklem said rate cuts, the door's open to rate cuts. So the consensus is that we're not going up anymore. And we haven't seen that inventory come to market. We've had a good weather, early spring market, but we still haven't seen all that inventory come to market where it's not being absorbed, right? So that's why we're seeing all this green, despite the interest rate environment and it being the most expensive time ever to own real estate because rates are high, prices are high. The inventory is the issue, right? And that's why our market has been so resilient. That's it. That's a quick summary on what's going on with benchmark price, house price index for March of 2024. Hastings, Prince Edward County, how that connects to Toronto, how that connects to Canada, but really how that impacts our local market. Like I said, next Bank of Canada rate announcement is on June 5th. The door is open for rate cuts. The market is still pricing in 0.5 to 0.75% base point cuts by the end of the year. So time will tell if that happens. And if it does happen, we're likely to see prices go up if we don't have this inventory come to market because the cost to own real estate is cheaper. So thanks again for watching this video. Again, hopefully you are finding some value in this, and see you next week for a new video.